Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week, we bring you updates on the markets with unique perspectives from our amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm Phil Plord, filling in for Jim Matthews today, who is on assignment. Joining me today from Wichita, Kansas, is our faithful feed correspondent, Jake Kingsley. Hey, Jake, how are you?
Doing very well this afternoon, Phil. Thank you. How are you?
Pretty well, thank you. And we're delighted to have Britt O'Connell along today. She is the head of our Grain Foundations practice from Platteville, Wisconsin. Usually I say 80 miles to my west when I'm in Madison, but today she's actually 20 times further away, 1,650 miles away from Glendale, Arizona, where I'm sitting. Britt, how are you today?
I'm glad to be on. Thanks, Phil. It's been a while.
Let's just get to it and timestamp the episode. It is 3:11 Central Time in the Midwest. Looking above my desk, I see President Trump on the White House lawn making announcements about tariffs. We don't know exactly what we're going to hear and what news is going to come out of the tariff actions today. Markets have been waiting on edge. We'll eventually figure it all out. But right here today, we're going to talk a little bit about the most recent USDA reports, specifically the planting intentions report, as well as the grain stocks report published on Monday. As far as where the markets are today, nearby corn closed at 457 3/4. Dees corn 448 3/4. Both of those markets sort of languishing in that range recently. And the same can be said for soybean meal. May today 287.20 per ton. December $304.30 per ton. That market has been sliding, but not at a rapid rate, sort of drifting along in this $300-ish neighborhood. All right, Britt, let's talk about tariffs in a theoretical sense to get the show going. We expect tariff announcements today, but that's only part of the news. The next part of the news is reprisal. So unless we see press releases from Mexico and other trading partners within like boom, 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 we could be waiting until tomorrow. We don't even know when we'll hear about some of these reprisals. But how has the topic been affecting the markets from your perspective?
Yeah, that's a really good call out, Phil. I think we are going to be waiting to see what any of those retaliatory tariffs may be. But the market's just kind of on edge. We've seen the market suck out some of that risk premium that it had built in earlier, specifically on the corn market, not solely because of tariffs, but certainly that was something that kind of was a bit of a dark cloud that loomed over this market. And it seems as if the market really is lacking direction right now. We haven't gotten any really big, robust news. And again, until we get clarity on tariffs, I think the market just is unwilling to make a big move in any one direction. And I think you could even argue that with an upcoming WASDE report, and we may have some more clarity before then, but that comes out already on April 10th, we may not see any changes from the USDA by way of demand and ethanol. Even though both of those categories currently are tracking well ahead of the current USDA pace, I think they're being a bit measured in how they make adjustments there and choosing to be patient to maybe get more clarity so as to not have to maybe reel those back if there are some retaliatory tariffs that come into place that start making significant impacts on our market.
I mean, uncertainty, Jake, uncertainty is usually bearish, but it's almost always paralyzing, right? I think that's part of the problem. We don't have any impetus, but people are afraid to do anything. That means they're afraid to buy it. They're afraid to sell it, maybe. And is that one of the reasons we're just sort of chopping along here?
Yeah, I think so. I mean, this market moved lower over the course of the last couple of weeks, I think largely in preparation for the acreage numbers that we got on Monday. And we printed those numbers, and they were, at least on the corn side, it was a bigger acreage number than industry analysts had put on paper ahead of report. And the market didn't do a whole lot of anything with it. I think because it had built in the assumption of that acreage number, and there's nothing left to trade until we either get a crop in the ground and some weather to influence that, or we get some sort of definitive clarity on these tariffs that are being announced right now. I imagine we'll be in a sideways trade at least until we get through next week's WASDE, and likely until we get a good understanding of what the repercussions of these tariffs are over the coming days and weeks.
Yeah, Britt, let's talk about the planting intentions report. I thought it was kind of amusing because the consensus estimate for corn acres came out at about 94.4 million, And then I polled yourself and a couple of other internal folks here, and everybody took the over. And it kind of felt like the walking around number, like the real consensus was higher than the printed consensus. And so I thought it felt like more like 95 million just walking around number. We came in at 95.236 million acres. And it's bearish in a vacuum. I mean, that's a big number, but the market response has been, because we were trading that number already, kind of, sort of, right?
Yeah, I think that's spot on, Phil. Very clearly, the market was kind of unfazed by it. I think if I remember right, we closed down maybe a quarter cent, and then yesterday we popped a little bit even. But I think a deeper dive into where the acres come from is warranted. And so if you look at kind of where we saw some big double-digit increases, the state of Arkansas, the state of Alabama, the state of Tennessee, Georgia had big increases, South Carolina, right? States that you don't necessarily typically associate with big, robust corn crops. We sort of had this sense, and I think I credit Jake to this. He was onto this for a long time, that just picking up on the sense that, cotton was going to be kind of the big loser in this year's acre battle, if you will. And it just became really clear when you look at where that concentration is. The southeast part of the United States is really where we're seeing a lot of growth. But you look at some of those key states like Iowa and Illinois, 3% increase, 5% increase, Nebraska, 5%. Some of those key states we did see an increase, but not the big double-digit increases like we experienced in some of these states. We've got the state of Nevada up 21%. So I didn't even know they grew corn there, but nonetheless, I think that is also part of what played into the market's reaction. And it's not to downplay the significance of where these acres come, but really we all know that the heart of the Corn Belt is in those I states, and we didn't see the massive increases there. It was in some of these fringe areas.
Yeah, just the reality, right? We talk about the I states, not the A states, Arizona, Arkansas, Alabama. We don't know. That's not where we're usually talking. And we did lose a lot of cotton acres in the process, because soybean acres, they're down from last year, which was expected, but soybean acres kind of came in right near expectations. The consensus was 83.762 million, and we came in at 83.495. So just, a couple of acres behind the consensus, and not really much different than what USDA had published at the Ag Outlook Forum a couple of months ago. So no real news there, right?
No real news there. And I think that whomever was assigned to the quarterly stocks reports numbers may have been let go from the USDA. And on a scramble, they might have just last minute asked, does anybody have the consensus numbers of what the analysts are thinking? We're going to have to go with those, because if you look at it, they nearly mirror each other. I mean, in corn, it is down to the hundredth. It is 8.151 billion bushels, just perfectly in line with the consensus, ever so slightly off in corn and beans. But really, there was absolutely no shock or surprise that came to us from those quarterly stock reports.
Just my history in publishing and news gathering and all these things. When I see the number like right on, like corn, I have the consensus at 8.151 billion bushels, and the actual came in at 8.151. Soybeans, the consensus was 1.901, and the actual was 1.910 billion bushels. I'm always like, who made an error putting together this table internally? I like triple check that just to make sure. So yeah, that was a total snoozer. I think as importantly, corn bushels in storage a little bit below where they were a year ago at the same time. Soybeans a little bit above, but even there, it doesn't really seem like game-changing kind of numbers.
It's not. It's definitely what the trade was expecting. I think, to me, what's going to have this market on edge as we move into the summer is, of course, going to be weather. That's every year, right? And your infamous two season, the too much rain, too little rain.
Too wet, too dry, too hot, too cold, too early, too late.
Yeah, that's right. So it's Phil's infamous two season. But besides that, we have these really interesting dynamic going on. Again, where I'll go back to, hey, demand is strong. We're mostly 200 million ahead of USDA pace week over week in exports and ethanol. But then you kind of push that against this whole tariff discussion, and you wonder, are we actually going to be able to realize it? And then you push kind of that ethanol number up against these mounting ethanol stocks and tighter margins and negative margins in a lot of cases. And you wonder, are we going to keep this up? And week after week, we watch and we monitor, and it just feels like you're on the edge of the cliff here going, are we going to make a decisive move one way or another on this? Because if you start tightening up this balance sheet, the market's going to be forced to respond if they start to feel like some of this demand is going to be realized by the end of the year. But on the flip side of this thing, if they start saying, hey, we're getting retaliatory tariffs, demand's backed off, we're building ethanol stocks, we got to slow down our grind, and you start building stocks again, well, now you've got a market that very definitively is probably going to start being willing to suck out risk premium pretty quickly once we get confirmation of a crop in the ground and off to the races.
Let's talk for a second about crop of the ground, because I think that there's some, maybe even rising anxiety about drought, dry conditions. The drought monitor comes out every week, and it's not a total crispy thing, but Midwestern key states are a little bit on the dry side. But there's a little trick in there, isn't there? Because what's going to happen is, because it's dry, we're going to plant like maniacs, right? We're going to get in the ground and it's going to be early, and everyone's going to be like, whoa, look at this, we're early.
Yes, very well said. It could be a bit of a trick for us. I think it's noteworthy, but it's hard to get too bought into a drought story yet. I think back to the last big drought I can remember, which of course was 2012. And actually, if we looked at the drought monitor for March or early April of that year, unless you were in the Southeast, you had no real big precursor to a drought coming. And so I would say it's not a drought until it's a drought. I think it is noteworthy. I think that those conversations are going to linger. The market may start buying into it at some point. But right now, I think we largely keep that discussion to the sidelines and see how it plays out.
Yeah, at some point, dry is good for planting, but you kind of need a little bit of wet to get the crop going, right?
Yep.
Maybe Memorial Day? Is that kind of like when we start getting a little shakier?
Yeah, that's probably a good point. By then the crop's generally in the ground and we're going to need to start seeing some moisture on a pretty regular clip to get this stuff going.
All right, Jake. So, we're talking about prices sort of languishing here. Markets came down a couple of weeks ago, anticipation of maybe these acres, probably maybe anticipation of the tariffs. We saw managed money liquidate a bunch of their net long corn positions. They're a little net short beans, I believe. So here we are. We got the acreage report in the rearview mirror, tariff news maybe in the windshield, another WASDE report. What moves us higher from here in, let's say, the next 4 weeks?
From here, I think you have to see some sort of significant weather development, probably in Brazil, or some sort of maybe flooding out to where they can't get things planted here in the US might cause some concerns. So there's got to be some pretty specific weather issues, or somehow we come in and we get tariffs wound up to where all of a sudden we've got an even more robust corn export program. I don't know that I'm forecasting that one necessarily. I think it's probably going to come down to weather, or if they make a big surprise change in the demand portion of next week's WASDE. That could get the corn market excited. I think, Britt, you and I have been working with folks all across the country the last couple of weeks because we've had such a healthy slide down here to 450, 440-ish type of number on the new crop window. And you can step in and get some very cost-effective topside coverage in place while we're down here. And we just typically don't live at $4.50 corn for very long. We either make our way pretty quickly to 4 or back over 5. And so stepping in and doing something now, because the market responding the way it did Monday to an even bigger than anticipated acreage number shows us that it's going to have a hard time pushing lower, probably until we confirm a crop here in the US and we're confident in the yield that is to come out of Brazil. You could see a handful of different things, pop this thing mildly higher. I think we're going to have some serious weather intervention to really run back up to the $5 mark, most likely.
So let's call it 450-ish on the low side. Britt, what takes us to $5 anytime soon on either new crop or old crop?
I think it's maybe some clarity on this tariff situation. Maybe it doesn't turn out to be as bearish. Maybe there's not retaliatory tariffs. So Trump softens his tone and we get some weather story to throw in there, because I think if we got a little more clarity around these tariffs, I think the USDA could feel more inclined to inch up some of that demand, tighten up that old crop balance sheet. Now you throw some kind of weather story on top of it, and I think you've got a market that's set to bounce. And I think, Jake, credit you for saying this over and over and over again to clients, but I think it's so important. This is a year where you have to be disciplined in your risk management and you want to remain flexible, because I think we can all agree there's a scenario where we could be looking at 2 billion bushel carryout on corn and we could probably flirt with sub $4 corn, not a lot unlike last year. And then there's another scenario that could play out where, maybe we get a really good trade deal. And we watched this happen in 2020, and all of a sudden the world, steps in and starts wanting or being forced to buy US commodities, and you start tightening the balance sheet with some of these other storylines, and now you've got a market that feels like it's got some room to run. So I do think you have to be pretty disciplined in this environment.
Jake, let's talk about meal for a second. Soybean balance sheets globally still look pretty good. Looks like we're going to get something of a reasonable crop out of South America on soybeans. All these trade dynamics certainly are a factor. We've got biodiesel activity credits, subsidies, also in the mix. Everything I hear from people in Everag universe is about, hey, you know what, with meal around $300, no rush, but lock it down some way, somehow. Is that kind of the camp that you're in? And what are you telling dairy producers in this environment?
Yeah, I think on the protein side of our feed purchasing, where we differ from corn is that on corn, we think with the added acres, we could get a better basis. On meal, particularly, we like the basis that we're seeing right now. Canola basis isn't quite as attractive because that's still all hung up in will they, won't they tariff Canada, and how does that shape up alongside the tariffs from China on Canadian canola products. But certainly it looks like you can step into a pretty attractive price on at least the first layer of your soybean meal needs for the next crop year. And certainly you can clean up the rest of what you need through the end of this summer because we expect some shutdown time ahead of harvest. But then if you're not comfortable buying a big chunk of your physical needs from a vendor, there are very cost-effective ways to step in and manage your topside risk on that. This $300 mark is just, we haven't really been below $300 for an extended period of time, very much in the last 5 years. We really haven't broken below $280 for much of the last 10 years. So it feels like soybean meal's got a little bit of an easy decision to step in here and do something. I mean, we talked about this, I think, a handful of weeks ago, but you could buy a quarter of your physical feed from a vendor and then cover another quarter of it with some sort of call strategy. And now you've got the topside risk taken out of half of your needs for the year. And you're still wide open if this thing does break to 280 or better on 3/4 of your needs. And so it's a way to really take a lot of risk off the table and remain very flexible at an already attractive price early in the year. That's the other part, is we're so early that you've got all the time in the world to trade around this thing if the market gives you an opportunity and you're not satisfied with where you've stepped in on this first piece.
I mean, I think if you just look at a 2 or 3 year range on meal prices, we are closer to the lower to that range than the upper end by a wide margin, right?
Right. And if you lose as many acres as we're expecting and they come in and they start to trim back on the incentive programs that have really driven the growth in soy crush over the last few years, and these crushers all start to dial back to 80 or 90% of the capacity they've been running, because last year they were running at record capacity month after month after month. You dial that back a handful of percent and all of a sudden meal's a lot less available and price starts to perk up pretty quick.
All right, guys. Well, thank you so much for joining us today. That will do it for this episode. We'd like to thank the Everag Insights team for their support, and we'd like to thank you, the viewer, for watching. Contact information is on the screen. As Jim likes to say, we greatly appreciate your feedback. We'll catch you next time on another edition of The Grain Feed.